What's going on, traders? I'm Antoine Farrar, and welcome back to another trading video with Digital Goatz Academy. Today is Tuesday, so you already know what that means. That is our market forecast. And if you've been following our channel, you already know what that entails. So let's go ahead and jump into the charts and look at what we're projecting for this week. Hope everyone on the East Coast, 'cause I don't know if that happened across the nation, but I hope everybody was safe during the that ice storm and the snow that came recently. If you're in an area where, you get snow all the time, then obviously I'm not talking to you. But anyway, let's go ahead and look at US 30. And if you are tuning into this channel, make sure you do me a solid and hit that subscribe button. It definitely greatly helps. So obviously, if you've been following us, I look at indices primarily. And for the last couple of weeks, I had been projecting that the market would decide to sell off. There's been a consistent pattern that we've seen throughout the years where the market will start building some form of resistance around after either around the holidays or a little bit after the holidays and do some sort of a correction. Like, it's normally considered like a major sell, but not really. So that's what we've been expecting. And as you can see right here, I know there's a lot of markups going on here, and it's probably like hard to kind of read, but the market has been basically building resistance since January, yeah, January of this year, obviously, but January 6, 2026, the market has been building resistance. And every time it's gotten to this area, which we ended up identifying this as consolidation based off of this area over here, but just, respect this as resistance. And every time we've gotten up here, the market has sold. Today, now this is US 30. So today during opening bell, we had that push down, and then we had Jolts data today. That was probably like the first, like the third or fourth set of major news that we had that we used last year has been consistent on influencing the market's behavior, especially when it helps our bias, right? So today, Jolts data, the market shot down. As you can see, this is where the market is at currently. Now, you can look at this, I wouldn't say two ways, but you can have two ways you're looking at this as a trader, right? Because if you're like me who looks at patterns, obviously that stuff sticks out to you. Obviously that stuff sticks out to you a lot, right? So when I'm looking at this area over here, I'm definitely keen for identifying some form of a pattern or just boxing in or trapping in the market based off of what I'm looking at. Now, based off of this pattern, this looks like it could have been considered uh, um, bullish flag. But I don't like that because we don't have like a flagpole. Whenever you're looking at a pattern, you want to identify the pattern, how it's, represented whenever you see the illustration and you get the definition. If you don't know what's going on, I think the Candlestick Bible has like trend patterns. I'm not sure. We had this amazing website in like 2020 to 2023, but it's no longer it's up, but it no longer shows the information that somebody could use to identify like, bullish flag patterns, bearish flag patterns, so forth and so forth. But anyway, this would be, based off of this move, somebody could consider this a bullish flag pattern. The reason why I turned it black is because before I was looking at this as to be consolidation pushing downward, and then the market spiked up, obviously breaking through this area. Now, one thing for me is what I look at what I've used in the past for me to be, profitable as a trader. So anytime the market produces a wick and the market doesn't continue in that direction, normally what you have is that the market is trying to fill this wick. But not to mention the market has been playing in this gap. Whenever you see gaps in the market, just know the market can stay there as long as it wants before it actually moves in that direction. The good thing that we've been seeing is that it hasn't been breaking this high or pushing a candle up that has been actually above this resistance, because obviously that would have been telling us that the market is obviously bullish. We don't want to get caught with our pants down, but each time the market has definitely been building a lot of resistance. Now, the more time it visit this area, obviously the weaker that resistance becomes. But if we push down from here, we're probably looking at the market to possibly do a major sell with just like what we've been projecting the whole time. To me, this was clear enough to say that, yeah, I'm confident that the market is selling off based off of this move. So before the market closed, going into the post market, which would be Sydney and Tokyo, it obviously retested or pulled back all the way back to this low. So pay attention to these wicks when you're looking at indices, because this stuff kind of it doesn't stick out as a sore thumb, but when you're looking at like previous lows or previous highs or just structure being broken, remember these wicks on a lower time frame are forms of structure. So the market could be respecting it in the same form on the opposite side. And what I mean is that you have a wick right here, you have a wick right here. So that could be the test for the opposite side to say what? If we're just keeping it simple, I know it's not going to show us because we're on a 4 hour time frame, but basically a previous low. If I draw this out, you see they cross paths, and then that would be a previous low. And then if we break it down to an hour, we'll probably find it on a smaller time frame. There it is, 30-minute time frame. And did it And that was the highest point it reached, which, we can consider a wick as a rejection. So we just got to see how the market is going to react after it opens up around 6. Well, how it reacts going into London and into New York tomorrow. But I'm not looking for this buy position to hold. I know what it looks like. But to me, this just looks like, again, we're in the beginning of the year. So the market is going to play these aggressive moves until we get actual data that's supposed to be priced into the market that hasn't been filtered in there yet. So that's what I'm waiting on. I think that, we have basically what we're looking for, especially just looking at it today. I go down to smaller time frames looking for any signs that the market is giving me where I can confidently say, yeah, the market is moving in this direction. Did I expect a pullback all the way towards the end of the day? No, but this was the overall move. We didn't have this overall move until what? 11:30. Man, that stuff just, man, clear signs all the time. Around that time where you actually get the move, you'll have the initial entry, which will be around like opening bell going into 10:30, and then you'll actually have the move, which will be followed by like the 11 a.m. candle going into the 12 p.m. candle. Then the market will give you what you're looking for. Normally, I don't expect for it to, try to pull back immediately. But I think it doing it and showing its hand earlier than later puts us in a better position. So the fact that this is a previous low, we identified this. I was just going over this, with one of my students that like when you're using technical analysis and when you're identifying things that it's like you're not making it seem what it is. You're using obviously what you learned as a trader to formulate your own analysis, but you're using technical analysis, which is like generic across the board, or in some sense it should be. So we're breaking down what the market is doing and basically what the principles are around trading, what we should expect. You know what I'm saying? Not guaranteed, but what we should expect. Especially with indices, it doesn't play to this. But the fact that we got JOLTS data today, and that was basically around the 10 a.m. candle, I'm looking for the market to stay below JOLTS data. So basically not even coming anywhere close to the high of the 10 a.m. candle. And if you look at it on the hour, that's probably where you want to so for US 30, that's what we're looking for. We're still looking for the continuation of a sell, but we do not want to see the market climb back up here. It could definitely like maybe test this imbalance. I'm hoping that it doesn't, but it could definitely test this imbalance. So US just based off of this move today, we're looking, well, me, I'm looking for a sell. So I'm not changing my bias. Again, these signs that the market has been showing me, again, each time that it's presented itself up here in this area around, let me get rid of this. What's the average? 49,000. Let's say 49,600. Each time it's presented itself in that area, the market has rejected it. Not to mention, each time it's done that, it's created a high point that has been lower, a lower high. It's lower than the last high. You see what I'm saying? So, well, let's look at it on a 4 hour. 8 hour can kind of be confusing. Yeah. Now that doesn't necessarily say that this is about to be a downtrend sequence, but when we're looking at resistance, if we're just keeping it simple, these are the signs that we want to see. We definitely don't want to see a return back up there. I think that'll make the market, I think that'll make that resistance truly weak, and the market could definitely get pretty volatile and then, break through this resistance. So what I'm expecting is that once we get this market to stop consolidating around this area, is for the market to shoot down from here, probably slowly. Hopefully, we get some bursts of momentum around like London, but just based off of what we're seeing right here, look at this area right here. Again, follow me, follow my lines. Trying to do another color that we don't have where I guess we can do that. You see each time, really, this area is like parallel to each other or even. But you see each time these lines are getting lower and lower based off their high points. So really what we need finally out of this area, because this just looks like big ass consolidation. I mean, you could say a range, and it is because there were definitely opportunities to take from in both directions. But what we're looking for overall is for the market to break up out of this, and I mean aggressively. That's what we really need. We need the market to shoot down and break out of these previous lows. It's created some form of support down here, but I think this support structure is weak just because the amount of times we've been on this resistance. I can't act like the market won't try to test this support again. Even if it is going to buy up from here, I would think that the market would try to test this support. But again, just based off this resistance, that's what I've been looking for. And today, getting that rejection, to me, that was the signs that, yeah, the market is pulling down. If you look at the stock market, if you pay attention to that or try to correlate foreign exchange with the stock market just a little bit, you'll see that stocks are down. A lot of stocks are down. I don't know, if there's a lot of investors that watch our channel, but your portfolio is probably down. Even your crypto portfolio is down. You know what I'm saying? I'm not saying that to laugh, but I'm just saying that this is kind of like the writing on the wall that's telling us, hey, we're probably getting ready for the market to just pull back. I don't want to say that, we're necessarily selling. This will be considered a sell, but I don't want to sway, new traders' opinions on believing that, oh, well, this is the sell, the market's selling. No, the market is still bullish, but for how, well, the fact that how it was bullish last year, so bullish with hardly any form of pullback. The only thing it was doing was just correcting itself each time, moving sideways, well, moving upward, but in a consolidating pattern. So the market has to give some, I wouldn't, okay, let's not say it has to, but based off of technical analysis, what we're expecting is the market to actually do some form of a correction that'll make sense, and then we can start buying back up from there. That's all we're looking for. You know what I'm saying? We're not looking for the market to necessarily reverse, but based off the signs that we've been seeing within foreign exchange and cryptocurrency, I mean, like I said, the writing is on the wall. Now that I got that out of the way, let's go ahead and look at another currency pair. So we're really just waiting to see what US 30 does here. I'm hoping this is the last time it revisits this gap. And I'm thinking that the next candle we have, the market's going to try to push down. a lot lower. So S&P 500, same thing. Now, what's unique about S&P 500 is that even though US 30 did make a high, it didn't go to our projections. S&P actually went to our projections of 7K, but I'm not gonna lie, by the time like the market started making all these moves over here, we were kind of out of pocket. Even though we still took advantage of this entire move up here. Um, I remember this is when Trump said 100% tariffs on China, and that kind of swayed our opinion, which we still made profit, but for whatever reason, we always found ourselves behind in the market. I mean, it's clear as day now, but man, like we already called this and the market knew that. So of course it was going to try to play moves like towards the end of the year, which it did. But it reached our objective, which we had been mentioning 7K. I forgot where I got that information from. I think somewhere on Bloomberg, one of these bank analysts or experts, whatever their position may be, they had mentioned that their projections were 7K. So that's what we were aiming for. And, that's what the market did. So as you can see, the highest point it went based off of Black Bull markets. It may be a little bit different based off your own broker that you're using on TradingView, but you can see that at the highest point it traveled was $7,012, right? Or 7,000, yeah, $7,012 and some change. So that's where it built resistance. That was the wick at. And then today, well, this week, the market popped up, one creating a gap, but this week it closed below, well, this move closed below the highest point that the market traveled. We have resistance up here and the market decided to fall again. To me, that's not a sign saying that, oh, the market's just trying to build support. No, I think that the market is trying to push down and we're now in the sequence where the market is about to start pushing down. So as you can see today, this is all S&P, which was a phenomenal move, you ask me. And these are the moves that we're definitely trying to catch. This was definitely a bank move. What's that for real? Yeah, 100. So that was 1,352 pips. That's crazy. From opening bell this morning. This was opening bell this morning. This wasn't opening bell yesterday. This was opening bell this morning. Yeah, this morning. And then we shot down, so the market started playing around towards the end of opening bell. And as you can see, I mean, I know maybe let me move this over. Yeah, as you can see, this was the 10 a.m. candle, and this is what the market produced. And this was basically triggered by Jolt's data. So that's something that we didn't expect the market to react off of Jolt's data as far as like in our favor. I just expected the market to react or be pretty volatile, but it definitely went in our favor. And this was basically 11 a.m. candle. And as you can see, each indices around 11, 12 p.m., the market, 11 a.m. to 12 p.m., the market sold off from us. And towards the end of the trading day today for the New York session, the market pulled back up slightly, which as you can see, this is a low up here. But also when you look at the percentage that the market traveled, let's just pull out our wick. So remember, we always try to aim for 50%, but we have to understand what each of these parameters mean. I'm not going to go into each parameter. That would be like for another day, or you can siphon through one of my older videos where I discuss this. But 38%, if we get this, which that's what I'm expecting. If we get this, this is definitely going to be a major sell. It's going to be choppy and then it's going to sell out of nobody's business. But anyway, like around opening bell, again, what we've been seeing consistently is what has opening bell been doing. We saw this last year when we're looking for the market to sell, especially like or buy, vice versa. We're looking for opening bell to do the opposite. So today, opening bell shot up. it looked more vicious, like because this information wasn't produced. But as you, well, definitely with US 30, it was vicious. It was definitely vicious with US 30. But the NASDAQ and S&P, they just pretty much sold off from there. So what we're expecting tomorrow is that if it doesn't just straight sell off, we're expecting opening bell to do what? Bring the market up slightly and then sell off from there. So this could not be the area where the market is selling off from, but if it is, what's probably going to happen is that it sells off post market and then opening bell will be like where it pulls back slightly. You know what I'm saying? I'm hoping that we get like a major. I got to look at what type of news is coming out tomorrow because it's only Wednesday. And I mean, it's only Wednesday and we got these type of moves in the market already. This is the stuff that we look for. And the fact that it's January and we're getting these type of, well, February and we're getting these type of moves, I mean, just strap your seatbelts in. You know what I'm saying? Because again, everything that we've been talking about is coming to fruition. It's not that we're trying to like forecast. Well, I guess we are trying to forecast, but it's not like we're trying to tell the future. We're just using technical analysis to make predictions or well, draw a conclusion. You know what I'm saying? It's using actual data. It's not just, as I'll be saying to other traders, sorcery, right? So S&P, still looking for it to come down. This would probably be the area where I'm looking for it to sell off. And it's perfect because where is it at? It's within our gap. So normally when I start seeing price break the gap, it starts playing around in that area. I don't think we have another gap like we do with US 30. So US 30, we have like two gaps that the market is pretty much bouncing between. But S&P, I don't think there's another gap hidden. If so, I just haven't. Oh, yeah, 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 over here. See this candle? I'm looking for the market to pretty much engulf this candle, the entire market. So the end where we're at currently, this is the end of the market, technically, because this is the information that we have currently, right? So there's been no more data created. So I'm looking for this to overtake specifically this candle because this is definitely a gap over here, but to me, this candle just needs to have some form of a better version of a correction. Now, we have seen it to where the market has basically said, yeah, I'm respecting this as a structure. But again, when we turn it to a line chart, this is what I want to point out. You see how there's no dip? You see how each one of these areas, the market dip, and then we turn it back to a candlestick, you see a candle, right? You see that there's a candle right here, but then when you should see a dip, right? You should see a dip just like these, right? Pay attention. You don't see a dip. Now you may say, well, there's a dip right there, Antoine. No, that's not the dip. That's not the same dip as when you're looking at this candlestick. So the fact that that exists, I'm looking at that as a sign that the market wants to come lower because the only way to correct itself or to fill this area is for the market to push down lower, pushing the candle down, not like these wicks and these questionable moves over here. Push down a lower candle to some form of structure, which could be here or which could be a little bit lower, and then buy up from there. Yeah, I would probably think it would be somewhere over here, to be honest. There goes support. That's our last area of support. The market would definitely be attracted to that. If not, its previous high, so somewhere closer to support. So what I'm looking for, like I said, is for the market to pretty much overtake this area. And once we go lower than there, now we'll have to see, because like I said, I have seen it to where the market said, fuck what you're talking about. I'm actually buying up from here. I respect this as structure, which is kind of wild to me, but I have seen it the opposite as well. So it's the beginning of the year. I would take the gamble that the market is probably going to overtake just this position. So it's going to push the market lower. And then from there, we'll start figuring out if the market is going to be presenting buy moves for us. But I think the lower we are, the better. I definitely want to see us like this was the area where the market actually bought up from. And as you can see, it kind of did the same thing, but I would like to see the market either come lower to this area or at least touch equal to this area. So that's my projections on what I'm expecting for like S&P on the long haul. So that's the type of move that I am looking for the market to somewhat correct itself so we can continue this bull move because if you just looked over the years, the market has always done some form of a correction around this time, whether it be in January, whether it be February, sometimes going into March. And then that basically puts us at the end of Q2 going into Q3. And then that's when you start looking for momentum in the market because we're heading towards springtime. Makes sense, right? Let's not get carried away, right? So that's pretty much all I got as far as like indices. Oh, what I wanted to do was show NASDAQ. So NASDAQ in the same way. These were things we identified. So again, I'm identifying the same thing throughout different currency pairs that are around the same category. So these are indices. Again, opening bell today. Well, I did this on the 30 minute and then so opening bell. So unlike US 30, the Nasdaq and S&P slightly rose and then shot really they just shot the fuck down, to be honest. And then you had this stalemate, and then 10 a.m. the 10 a.m. candle opened up, which was what? Jolt Theta. We identified that as well. So we marked this up, the high of where 10 a.m. opened up at, right? Well, really, this is where 10 a.m. opened up, and then it slightly pushed up and then shot down, started consolidating. And then what do we have? 11 a.m. candle just pretty much brought us down. And here we are again, a previous low point in the market, which when you're looking at a move like this, unless we go higher, we have to assume that the market is trying to basically consolidate or move sideways in some form to correct itself without actually making a major pullback. As you can see, S&P and NASDAQ didn't really do a major pullback like US 30. So I'm thinking that they're going to consolidate and then we'll probably see the same thing from US 30 uh, eventually, whenever it decides to break out. But that's what I'm looking at for indices. I did want to show the NASDAQ real quick. And the last thing that I did want to mention is Bitcoin. So you might as well, again, when we talk about Bitcoin, we are looking at like all of the crypto tokens don't move simultaneously as Bitcoin, but we look at it as the godfather. So its behavior influences the bias of like stable coins or altcoins, things like that. So if you're looking at, some other crypto token and Bitcoin is tanking, you should probably expect that crypto token to be tanking because Bitcoin is basically the superpower. It's basically the index for all crypto tokens. I'm not saying that's what it is, but that's the way I view it, and that's the way the market has been, well, basically, yeah, the market has been benefiting me by viewing it from that concept. So what we've already identified is that what? We said that from this area, shit, excuse me. We said from this area that we expected Bitcoin to sell off. It did. And did it sell off? So that was our first sign to see that. Hold on. Man, that was our first signs to see that the market was basically coming down. And we do expect the market to go lower. So I know a lot of traders in the crypto space right now are projecting that this is going to be a buy zone because the last time we've been here was the 74K. We did go lower. I didn't even know we went lower today. We went 72.8824. So to me, just even showing that little bit of sign, I'm looking at the market to continue down. There's a lot of people that's banking that this is the buy area. I do not think this is the buy area. Again, our first if you want to say line of defense would be 65K. But again, we are expecting it to go lower. We're just going like phase by phase. So every time it hits like an area we projected the market to buy up from, we're going to assess and then see. But to me, I expect the market to go lower before it goes back higher. If I'm looking at the lowest point, I'll be honest, like I said, 40K. I really can say like 31K just from how the market has been showing me this bear trend. But again, I don't want to get carried away, but these are some things that we projected in like 2022 and the market shot up against us. And I think this is the market's correction. Even when you look at like XRP has come down as well. So it's no longer at the $3. I think it's below $2 now. Excuse me. So when you're looking at signs like that, to me, it's like, again, the writing on the wall. So what's the most logical approach? This is support. It's on a higher time frame. It's on a 2 week or the weekly time frame. The market should respect this. It may react to it. It may buy up slightly, enticing people to buy up. But again, with cryptocurrency, like I said, we've seen the clearest form of structure when we're looking at patterns. We've already mentioned a pattern earlier, which was the bullish flag pattern, right? So guess what? We've already identified a bullish flag pattern, and I've seen this a lot through my experience with Bitcoin. A bearish flag pattern, right? So Bitcoin definitely does like bearish and bullish flag patterns a lot, and it's very noticeable. And sometimes you question it because of how it forms. Like the market actually went higher than what we expected, even though we did have this area of resistance. But I did factor that the market could possibly do this. I did do that, but it doesn't matter. You know what I'm saying? I took a loss. Out of that move, but I did expect the market to, I said if the market was gonna pull down, then yeah, I have to assess that price is selling off. And again, we caught ourselves in this window over here. And as you know, you can check our videos where we said that the market was selling off from here. That's what we're expecting. But anyway, look at this. This is a bearish flag pattern. Even though we basically did a price trap within this area because the way it presented, I knew it was a bearish flag pattern. So when we're looking at what it's supposed to, what are the confirmations we're looking for to identify the pattern? This is your flagpole. This is your flag, and this should be your continuation. And because we're on a weekly time frame, it shouldn't be like a shallow move. This shouldn't be like its endpoint. You know what I'm saying? It should continue, but then wherever it turns around and you start seeing the market pull back up again, oh yeah, it's not respecting the pattern no more. The pattern is pretty much done. But since we're looking at it on a weekly time frame, we could probably expect the market to do what? Like I said, come probably all the way back at least to this area, which will put us around, like I said, the 65 to really 50 range, or 52. Let's see, 53 to 60K range. You know what I'm saying? At that point, we're still assessing because again, we kind of expect the market to go lower. We just want to see how low the market is going to go. But once it starts turning around, wherever that may be, it's telling you that basically the pattern has exhausted itself and now we're going back up. So wherever the market starts sharply buying up, and then you start seeing, bigger candles like closing on the higher time frame, then yeah, that's a sign that it's basically reversing against this pattern specifically. That's a little tip right there. But that's all I got, traders. Definitely wanted to point out that stuff. I'm very confident on what we're looking at this year. And once we start getting these buy opportunities, strap your seatbelts in and just be prepared. You know what I'm saying? I do think that this is going to be a bull market. But I think we gotta just, get a lot of this news that's priced in that hasn't positioned itself in yet. I mean, that hasn't been filtered in the market yet. And then whatever else chaos that's going to ensue. Again, we're looking at point A. I think we've identified point A. We know that going to point B, anything crazy can happen. So we've already seen this with like Bitcoin. We're seeing this now with indices. So we just got to be prepared for kind of like the unexpected and just be cool on your entries. You know what I'm saying? Just be as accurate as possible on your entries. Try not to over leverage because it is the beginning of the year. We have all year left. especially with it being only the second month. But I'm Antoine Farrar as always. I hope everybody has a successful trading week. I'll see everybody on the next video with Digital Goats Academy. This is Antoine Farrar again, signing off. Peace.